Hello, LinkedIn family. A very good evening to everyone. Hope I'm audible enough. Hope you are able to hear me. Yeah, I'm excited to welcome you to today's session. If you are hearing me, just type tax in the chat. Yes, I welcome you once again to today's session. Yes, closing there strong because this is the season. And we are saying that as you listen, we are going to listen to your tax doctor, CPA, CTA, Dedan Mutatinensi, a tax expert at Demo Consult. And at Demo Consult, we are saying, close your year stronger. You turn your tax stress into strategy. No more stress, especially after this discussion. Feel free. By the time we end the chat, the discussion, you'll be more confident than ever before. Now, if you are a business owner, or if you are a finance professional, you're a business leader, whether you are a manager, whether you are a finance person, whether you are an accountant, who feels overwhelmed by the tax season, well knowing that for businesses that follow the normal financial year, and when I talk about the normal financial year, we are looking at the government year, which runs from 1st July to 31st June. So if you are one of those people who follow the normal business, the normal government financial year, then this is for you, especially knowing that we have a deadline for filing tax returns just a few days away. The deadline is 31st December. So we need to go into this so that by the time we reach on 31st December, pressure is down. Now, feel free to engage, feel free to share your comments, and I will be able to attend to them. Now, why this talk matters? As I said, we are towards the end of the year, 31st December, and that happens to be a deadline for filing income tax returns for those businesses that follow a normal financial year. Now, every year, businesses lose millions in penalties, disallowed expenses, they lose money in interests. Those of you who know how to look at your ledger, you find you have accumulated so much in interest. But also we have seen tax assessments even now and then, not because businesses are not compliant, but only because they are not prepared. Can I say it again? That businesses are losing millions of money, not because businesses are not compliant, but only because businesses don't prepare. Now, URA has advanced. Those of you who follow the stages of development that URA has gone through, URA is becoming more digital. What does that mean? That URA is more data-driven. Ask yourself, as a business owner, as a finance professional, as a business leader, how digital are you when it comes to your operations? And with URA becoming more digital and data-driven, it means it is more interconnected. That URA can do an analysis on your entity just in a few minutes. They have a system that it checks 360 degrees. Just put Demo Consult TIN number, run through just in a minute. URA has already gotten pointers. There is a mismatch here, there is a mismatch here. You have seen IFRS and the evolution and the changes IFRS has brought onto the scene. We have seen automated audits. That this time around, URA actually, they do more of desk audits than field audits. That because they are data driven, they can analyze data very well, they can process data very well. By the time they engage a taxpayer, they already have everything about you. You have received advisory notices. I'm sure if you are in a business, you have seen a message from URA telling you about mismatches from a certain period. things that are not clear, and they are inviting you, come and we talk, because we are seeing things on your account that are not clear. But also, we have seen what we call cross-border data exchange. That URA, because URA does not act in isolation, Uganda as a country is a signatory to many other international agreements that now URA can easily share information or data with other tax authorities. And by doing that, it means it is becoming harder and harder for business people to actually avoid taxes or evade taxes. Now, what am I saying? That to stay compliant today, unlike before, it requires clarity, it requires you to have systems, but also it requires you to be proactive. That whatever you do, you don't need to first wait for the last minute to start panicking. What am I saying? That yes, as we get close to December 31st, you need to prepare. You cannot wait for 30th December and you want to prepare for a return that is to be filed on 31st. That cannot happen. Now, what really matters as we come close to the end of the year, as we come close to this deadline that we are talking about, what really matters to you, but also to the business? Because the moment you don't get things right first time, you are actually getting the business into problems. Now, at the heart of this preparation, before the year ends, focus on the following. Focus on the following. That one, you need to clean your books. You need to clean your books. And when we talk about cleaning your books, the first thing on top of cleaning your books is what we call reconciliation. What are we saying? That you need to look at your transactions. As a business, every other transaction that you get involved in has a tax implication. Do you hear me well? That every transaction that you get involved in as a business has a tax implication. So your income is another person's expense. As we transact on a daily, we deal with third parties. Our money is kept in the bank, or we sell on credit, or we buy on credit. So we deal with other stakeholders. Now, by the time you get into filing, you need to have reconciled all these records to align or to agree with the records that you have internally. For example, make sure that you have reconciled your bank statements with your internal records. You have a cash book where you always record the transactions you have with the bank. Are they talking the same language? Have you looked at your sales that are in your IFRS? Have you reconciled the sales in IFRS to the sales that are declared in VAT every month? I've seen scenarios from a practical sense that you will file a return. Along the way, you realize that possibly there was a sale that had a mistake, or maybe some returns some goods have been returned, and you raise what we call a credit note. A credit note is approved by URA, but the system at URA does not actually reconcile your account. That it is you to amend the other return and remove that invoice that you had already declared as a sale. Can you cancel to this? If you are not doing reconciliations of IFRS sales and VAT, at the end of it all, you find VAT is having more sales, IFRS is having less. That becomes a query from URA. Have you reconciled your imports? Have you looked at your ASCUDA report? Some of us, we just get every other money that we have paid at importation, and we want to call it a purchase, or what we have spent at importation. It can't be, because here there is what we call recoverable taxes. If you have paid VAT at importation, you have paid withholding tax at importation, those are taxes that are recoverable. That VAT will go onto your VAT account. Withholding tax will be your income tax paid in advance, and for that matter, it cannot be an expense. Have you reconciled with withholding credits? Some of us, you find you have credits and you have been paid by people, they have withheld or deducted the 6%, and the sales that you are declaring in your income tax returns, when the taxman uses the withholding credits, actually there is a mismatch. Yes, in the practical sense, the mismatch can be there because they are payments that cross financial years. But the moment you have not done reconciliation, then it becomes hard. If you are a practitioner there, have you had a challenge around withholding tax and income tax sales? Possibly you have. If you have, just hit the chart and tell me what you have experienced. Now, we have seen where you are having supplier accounts that are not reconciled. You are having payables, but when a taxman asks you for documents that support how these people sold to you on credit and you haven't paid, you cannot support. So we can do better. But also, we need to verify as we cross the period what is happening on our ledgers with URA. Do I have some assessments that I don't know about? Do I have some penalties that have accrued that I don't know about? Because all of this, you must account for them. You look at your monthly returns. If you have been filing, if you are someone who files every other month from July to June, then, for example, if you have to look at your salary expense, does it actually total to the returns that you have filed every other month? I have seen scenarios, for example, where you find that your salaries amount say 24 million, but in the return and the income tax return, you are filing 30 million, and that is automatically a query. We have seen this. Again, if you're in practice, you have seen those mismatches. But also, you need to ensure that if there is any outstanding query with URA, as you plan for the end of year filing, please account for this. What is the implication? The other important bit as we plan, you need to confirm in terms of expenses, what is allowable versus what is disallowable. It is not that all expenses that you incur are actually allowable. So as you reconcile, make sure you differentiate between expenses that are for the business and those that are not for the business. There are expenses that we take, there are those costs we take to be expenses as accountants, but when the tax law comes in, you find that actually they are disallowed. So you ensure that all of these are accounted for properly. Don't mix your personal expenses with the business expenses. I mean, if you go into your business and you are getting a 20 million and you are going for a holiday, that will not qualify to be a business expense. I mean, you are taking your family out, that is your personal business. And the taxman cannot allow you to actually claim that expense, just as an example. Now, we have seen also cash withdrawals. Because you are the business owner, wake up, go on the account, take money out. As you take money out, along the way, the first document that URA asks for when you are engaging it, when you have a case, is the bank statement. Imagine they have asked for an assessment, for a bank statement, and on a certain day, 150 million went out. Then the taxman is saying, okay, this money went out. What was it for? Do you have an answer? So the business, especially for companies, remember that a company is separate from you. So you cannot mix your personal transactions with the company transaction. We have seen scenarios where you find water bills are in the names of the director. Electricity bills are in the names of the director. You have a car that is in your names, but when you are claiming expenses, you want actually to claim the expenses for your car on the side of the company. Does it really make sense? We have seen scenarios where you borrow money as a business owner and you go and put it in a business. There is no record that actually shows that you have given this business the money, and you feel you will explain to the taxman, and the taxman allows. This cannot happen. It can be avoided. Proper documentation will sort out most of these issues that I'm talking about. Now, we also have issues to deal with fixed assets and capital allowances. As we prepare, have you done a review on your asset register? Do you know the assets that you have added in that period? Are these assets supported? Well knowing that all the fixed assets will help your business reduce the tax by computing what we call capital allowance. What a normal accountant would call depreciation. For us in tax, we call it capital allowances. So for you to benefit from these capital allowances, it means the assets that you have acquired in the period are supported. We have seen scenarios where one puts assets, but after putting assets, you cannot even defend them when the taxman is engaging you. So you ensure you update your asset register before you get into computing capital allowance. Ensure the receipts. If they are big assets, ensure they are board minutes that approved the acquisition. But also, if they are those that have been disposed of, make sure all those can be supported. Now, the other important bit is misclassification. That quite often, on record, we have only 3 classes of assets: class 1, class 2, class 3, where we apply class 1 40%, and class 2 we are applying 30%, and the other class we are applying 20%. What does that mean? That if you get an asset that belongs to class 2 as an accountant, and you put it in class 3, then you are cheating yourself. That where you would have claimed a 30%, you will end up claiming 20%. But then what about when you get assets that are meant to be in class 3 and you put them in class 1? It means you are overclaiming, and the taxman will not allow that. The other important area to look at, ensure your payroll is accurate. Most of the businesses, especially the service businesses, the biggest expense that you have is payroll, is the employment costs. Ask yourself, have you declared all employees? Have you computed the taxes thereon correctly? What about the treatment of expatriates? If you have people that are coming from out as expatriates, how do you handle? Will you just bundle them as employees and the taxman allows? It will not work. Have you reconciled pay as you earn deductions with NSSF? For your information, dear viewers, that today URA and NSSF, they communicate, they share information. I have seen scenarios where someone wants to declare NSSF, but does not want to declare pay as you earn. It cannot work that way. Just know that along the way, they will get you right. Now, even if you have not done much into taxation, there is some important thing, but which is a common mistake. The moment you are declaring NSSF in your return, ensure that you are putting only 10% of your salary expense. 10% of your salary expense should be the NSSF. Now, the moment you put an NSSF amount that is not a 10%, either less or higher, automatically that is a query. Now, if you are there on this call and you are involved in cross-border transactions, then URA has woken up. Issues of transfer pricing documentation, issues of intra-group charges, issues of withholding tax. The URA of today is not the URA of yesterday. What does this mean? That for you, if it means tax planning, for you, you must do double work. Because entities that are involved in cross-border businesses, normally they involve in huge transactions, and the taxman is really awake when it comes to this area. Like all the other businesses, the taxman has woken up. But ask yourself, you as a businessman, as a finance person, as a manager, as an accountant, have you woken up? Yeah? Ask yourself, if you are a queried you tomorrow, would your documentation defend you? I come again on that just let's ask ourselves, me at Demo Consult, or you, wherever you are, if you are a queried you tomorrow, would your documentation defend you? If you have answers, you can even share so that we can learn from you. Anyway, how to stay compliant without feeling overwhelmed? Because especially towards the end of the year, we get overwhelmed, and it can be avoided. So in what I'm about to discuss, we need to see, are there ways of actually how we can stay compliant, but without being overwhelmed? You know, if you have ever been overwhelmed, please type in the chat. If you know you have gone through a season and at one point you're overwhelmed, just type in the chat. We need to understand how this. If you have been there and you find you are fighting with the end of your season, and so just type, you say, that year I almost gave up on my job. But also, if you're a business owner, say, my accountant here messed me up. Sometimes we fail even to go for Christmas because we are overwhelmed. But this can be avoided with proper planning. And that's why we at Demo Consulting bring you these discussions with CPA, CTA, Dedan, Mutatinensi, your tax doctor. If you have any issue, the tax doctor is here. Just get into the chat and type, ask, engage. You will get all the answers that you need. Now, are there ways how you can actually stay compliant without being overwhelmed? Yes. Actually, compliance feels heavy when there is no structure. I need you to pick that properly. That the moment there is no structure, then you will always be overwhelmed. How do we then make it manageable? Are there ways of overcoming this? Yes, that the first point is that we can break compliance into smaller tasks. Why would you wait for the 12 months to end, then you want to do reconciliations? As an accountant, you as a business owner, do you follow up to know if your accountant is actually following up on tax matters on a weekly basis? That instead of waiting for their end, do weekly reconciliations, and these are possible. File your documents immediately. Whenever I'm doing tax audits, you find you're asking for documents, people are like, hey, by the way, the other person has not given us receipts. The other person has not given us this document. Just imagine. Why wait for a tax auditor to come and then you start running here and there like a headless chicken, as it is commonly said? Now, ensure you update your supplier records, your customer records, make them up to date. That way, you are on the journey, But importantly, as point number 2 on that, go digital. Go digital. Have an accounting system instead of relying on your Excel. Excel does not affect what you call double entry. That the moment you are using Excel, you actually struggle where you would have spent a minute, possibly you spend 10 because you are trying to sort here and there. Excel would have worked because I know there are experts in Excel out there. Excel can actually work like another system if you are an expert in using Excel. But most of us, we actually struggle. The other important point is that instead of struggling with storage, you need to possibly think of now getting a cloud storage. That all your documents are kept on a cloud server where you can find them anytime when you need them. Importantly, IFRS has also come in to help us when we talk about going E, that today, when I'm filing someone's returns, I don't need to ask about sales. I will say, give me your IFRS login details. I'm sure I will get every other information to deal with sales. So try to go digital. You can automate the payroll so that every other month you just get the payroll prepared. You don't need to spend hours in Excel. By the way, it is said that digital systems will reduce risks by 70%. You can try to check and see. The moment you digitalize your operations, your activities, then you are saving a 70%. You need to delegate smartly and train your team. Yes, you cannot be everywhere. Even if you are the finance manager, have a team that has been trained, then delegate them, give them tasks so that they can handle. Make sure they appreciate tax rules. Do they understand VAT rules? What about the withholding tax obligations? How are they handled? Are they good at handling, for example, the payroll? What about IFRS operations? Yes. Do they appreciate what is deductible and what is not deductible? So that as you move along, As you train them, you are making the team stronger, but also it gives you time as a finance expert or a finance manager to concentrate on strategic decisions. Also, keep a compliance calendar. I've seen people struggle here. Do you know the taxes that you are registered for and when they are meant to be filed and paid? Do you know when VAT is meant to be filed and paid? What about withholding tax? What about pay as you earn? Do you know the dates when you are meant to file your provisional tax? Do you know their end tax filing due dates? Do you have this calendar in your business? Ask yourself. Or you just get messages. I have seen people miss deadlines and they end up being penalized, something that can actually be avoided, you know? So first, VAT, the deadline for filing and paying is 15th of every month. The same applies to withholding tax. The same applies to pay as you earn. For provisional tax, a company is required to file 2 provisional returns, that is by end of the 6th month in the financial year and by end of the 12th month in a financial year now, in an accounting period. What am I saying? That there are other people who are not following the normal financial year of the government, and for that matter, they use other 12 months other than the normal financial year. And in tax law, we call it a substituted year of income, another period other than the 12 months that are followed by government. The other point is that you need to conduct what you call mini audits. Don't wait for the year end. There is a quota. Have you checked how you are faring in this quota? Can you have what you call quarterly reviews? Can you engage at the earliest, not waiting for the 12 months? Now, the moment you do that, I can confidently tell you that you have overcome most of the challenges. Now, staying compliant will be much easier when you have systems, but systems that actually work, you know? Ensure that actually most of the work can be done by systems. Now, as we prepare, there are common mistakes that quite drain money, that as a business owner, you are losing money. And some of these mistakes that I want to go through very fast, I see our time is running so fast. One, we have seen scenarios where we are not accounting for cross-border withholding tax. Yes, that you are having services that you are procuring from outside Uganda. And normally, as long as you are paying someone outside Uganda in terms of income tax, because that person has earned income from Uganda, the law requires you to deduct a 15%, right? The law requires you to deduct a 15%, and for other countries that have what we call double tax arrangements with Uganda, possibly you deduct a 10%. But also, if what you are procuring qualifies to be an imported service, that also brings a VAT implication. What am I saying? That the framers of our law said that services you should be procuring from Uganda. So if you are one who wants those expensive services from outside Uganda, then on the invoice value that you will have paid, you will charge yourself an extra 18% and pay it to your RA. And unfortunately, that VAT cannot be claimed. It is like a cost of buying from outside. Because remember, if you buy these services from within Uganda, they charge you VAT. But the difference that when they charge you VAT, you will claim it. If you buy services or if you procure services from out, you will charge VAT yourself and you will not claim it. Now, I talked about payroll, that always there are mismatches. And here we are looking at scenarios where you have some benefits that you are extending to your staff, but you have not included them in the payroll. You have staffs with no contracts. And the moment the taxman comes for an audit, this becomes a big problem. There is no way you can support a actually had this stuff when you're having no contracts. But also, most of the allowances, not benefits in kind, most of the allowances where you get someone and give him cash. If you are giving your staff, for example, lunch allowance, that is taxable and should be part of their payroll computation. Now, we have also seen a mix-up between independent contractors and employees. You have some people who work, they come and use your office equipments, they find a computer at your work. Every other day they are at your work, Monday to Friday or Saturday. But for you, because you know, when you call them independent contractors, you will charge 6%. But if they are your staff, then possibly you are putting them under the payroll system and the tax will be higher. So we try to play it smart as business people by categorizing them as independent contractors. It can't happen. Again, the tax rules and regulations guide us on how you determine who is an independent contractor alongside who is an employee. As long as you have someone you control, you say you will be at office from 8 to say 5, the person comes as he or she is, and all the other equipments are at office, you pay consistently every month, this is how much I pay you, all of these other benefits, then that is your employee, and this person should go through the pay as you earn system. But if you have employee didn't work on your tax issues, one, you not determine the time that I will do the work. You not give me a computer to use. You not give me internet to use. But also, my payment may not be as consistent as the other one is, depending on our contractual agreement. Now, most people who have tried it, normally when URI comes in, they face problems. I talked about cross-border services where you have expatriates. You need to be sure, does this qualify to be an imported service? What's the implication? What's the VAT implication? But also, what is the withholding tax implication? Now, I need to run through this again so fast. Now, the other important part that I needed us to look at is how you need to read the requirements with confidence. How do you read tax requirements with confidence? And here, this is how you do it. That one, you need to know who. That's the first question you need to ask yourself. Who is responsible for filing and paying? Are you the one? Is it the business or it's the employer? If I'm fully employed at Demo Consult, then I know Demo Consult is meant to deduct, to file, but also pay. If I own a business, then the business is responsible for filing and paying income tax. You know, if you are just a director and you are having several businesses, then you're required to file your returns and pay. Then the other question is about what? What exactly is being taxed? Is it the salary income? Are you looking at services that you are offering? Are you looking at the business income? You are trying to understand who, what, but also when. When is the deadline? I talked about deadlines. Do I have monthly deadlines? Are they quarterly deadlines? Are they weekly? We have like people who are debating who file weekly returns. Is it annual? But also, there is a question of how. How am I supposed to file this? If, for example, I'm filing returns, do I need any supporting documents? Hope we all know that starting with last year, that you cannot file a return that has a turnover of 500 million without supporting documents. No, without audited books, to be specific. That a return that has a turnover of 500 million should be supported with an audited report, unlike before. you know. So you're asking yourself how, you are then asking yourself, which documents, as I'm filing, do I need, which evidence will I use to defend my filing? Because at the end of the day, the URA of today, they are doing return verification and examination so fast. Previously, they would take like 2 years to verify a return, but they have already, for example, verified 23, 24. 24, 25, we are getting messages now, unlike before. So when you use these methods, tax stops feeling like a mystery because you have a structure, there is something that you are following, and it just becomes a process. So ask yourself, as an individual, as a manager, as a business owner, do you have a tax process you go through to ensure that you are comfortable? You know? So the last thing that we need to look at, we are about to conclude because time is fast spent. Now, the mindset that we need all to have, we need to shift as we get into this season. We need to go with that mindset that turns tax season from being scared to a strategic thinking. That tax is no longer something scaring us, but it is something that is strategic. And that's the thinking that I would want us all to go with. I know that most businesses fear taxes because they only deal with them on the last minute. That's the challenge. Why would you wait for the last minute? That can we really shift the thinking? Can we have a shift in our mindset? Yes, because we need to shift from fear to strategy. Tax is something that is with us. Tax will not go anywhere. The tax money is improving every other day, digitalizing. But you, who is a business or an accountant, how are you getting better? So we need to have that shift from fear to strategy, because when you are compliant, compliance in business boosts investor credibility. That when you are talking to investors and you are compliant, and when they say, give us your tax clearance, it is a click away, and in minutes you have your tax clearance. Do you know how that is? Even when the investors have a chance of looking through your figures and they find you are paying taxes, it improves your credibility. But also, when you have proper records, then you have reduced what we call an audit exposure. You are sure that I have my records, even if they come, let them come tomorrow. But I'm sure most of us, if you see an alert that we are coming for an audit, that night you don't sleep. And my call to you is that we can overcome that pressure. But also, when you are doing early planning for tax management, it creates what we call cash flow stability. Why would you wait for URA to first freeze your account for you to act? Because there are ways. If you have filed the return and possibly you are having cash flow problems, you reach out to URA and get into an understanding and you pay in installments. But the moment you just keep quiet, automatically they will freeze your account. They can even come and close you. So I'm just trying to say that we can always be proactive. And proactive systems eliminate penalties. That one I'm sure. I've lived it, I've seen it. At the moment we become proactive, then we can save so much. So that's the mindset that really I would want us to look at. So tax compliance is not a burden. It is not a burden. Instead, it should be looked at, or it is a competitive advantage. That businesses with strong compliance, they grow faster because they are able to manage risks better, but also they attract opportunities with confidence. That whenever they are talking to potential investors and all of that, then they don't fear anything. Now, my experience with some of the taxpayers out there, I have seen people panicking. You want to be paid, but you cannot issue an IFRS because URA has suspended your IFRS. You have a customer, a client who is saying, give me the invoice and get the money, but you cannot invoice because URA has suspended you because you are not actually paying. Don't wait to be suspended. Engage URA. People have worked with URA for over 10 years. They listen when you engage them. When you have issues, don't sit back. So, my LinkedIn family, thank you so much. Thank you so much for joining today's session. Hope this session has helped you in a way. In case, if this has helped you, just drop a comment. Tell us your experience. We plan to have most of this. You can even ask many other questions. We shall plan for them on how to attend to all of them. There is no question that will go unanswered. But before you go, before you get out of this, just remember this, that tax compliance is not an event. Tax compliance is not an event. It is not a one-day thing. It is a routine, something that you do over and over and over. I always say that tax compliance is a journey, but also it is a mindset. When we talk about tax, how is your mindset? But also we are saying that now tax compliance has become a strategic tool for growth. So, as we conclude, if you would like a tax compliance health check before the year ends, you can reach out to us at Demo Consult. If you want a compliance checklist, you can still drop a chat and we say, I need ABC, and we can have a talk. But if you want support for your, either you are an SME, you are an NGO, you are a group, just send a message, reach out to us. Reach out to us, we can engage, we can help, we can support. Our role as tax experts at Demo Consult is to ensure that you break down these tax scenarios. We know tax is raw, but we are determined to break it down so that every other person can actually appreciate, but also that every other person can get onto this compliance journey. So let's make tax season work for you. Let's make this tax season work for you, but not against you. I thank you so much. Meet you some other time. But for those of you who have asked questions, I'm going to put in time and I attend to all of them. Thank you, thank you, thank you so much. And a nice evening.